Stock market analysis, projections on the S&P 500, but some important information for you. Make sure that you read this slide. It tells you about how we approach our analysis to the market and about when you use it and the important aspects of trade ownership. You must own your own trades. This is the final 3 days of our special trial, level 3. It has everything that you see on this list. Just $59.50 non-recurring. You will not be billed again, and we're going to send you a special offer again after the month if you want to stay on. This is our best offer ever, and you get everything that you see here, including everything in levels 1 and 2 also. And you can get that information by going to the top of our website. Click on the special offer that you see up on the top right over there, and that's going to take you to the information page where you can sign up if you choose to. And yes, I've been an analyst and a trader in the market for 50 years. Became a trader on the Chicago Board Options Exchange on May 20th, 1974. Just incredible 50 years I have had, and I'm still at it, doing the analysis as I used to do right over here, as you can see, on paper charts. So I've been at this for a very long time, and for those of you that are brand new, I'm sure you're going to enjoy just taking a peek at this immense amount of information we have, including 1,000 videos you're going to be able to watch in there. So just absolutely a fantastic list. Go up to that top of that page, click on that, get the information, and I hope you do sign up. All right, the stock market this week, let me give you a little brief on what went on. Well, the stock market, it has solid gains again. S&P 500 and the NASDAQ up near highs to the top of the ranges they've been trading at since the election day burst. The Russell small gains, same thing for the MDY, the midcaps. And those are the kind of stocks that are really going to need to be able to lead the market to the upside as we get into a rotation. Because even though we've gotten a bounce in the NASDAQ and the techs this week, those stocks are not in the best patterns, where we have some stocks that are in this smaller cap that are really looking like there's a better opportunity to me. On Tuesday, Powell said there's no rush to cut rates, and stocks did fall on that day. But Wednesday, stocks were falling very sharply in the morning on the CPI, which was much hotter, but then did reverse upward on the news that Trump and Putin had a conversation on the phone, and it was about peace talks. Since then, Zelensky has come out and said, well, it's going to be on his terms, and he's not going to meet with any underlings. He wants to talk to Putin directly, and that has a lot to go before we really know if there's any solid peace talks that are going on. Thursday, the president came out and gave some relief to the market, as he says that they're going to put reciprocal tariffs across the board. So whatever the U.S. Is getting tariffed by another company, we're going to do the same thing. They're going to study those, he says, and so it's signed, but it's not really activated yet. So the market took some hope from that and moved up, and then moved up again here on Friday morning, but it's kind of floundering here early in the day as we do this recording around midday. But still solid gains on the week. Overall, the sideways correction the market had is positive. And the reason for that is it's using up a lot of the time. It used up a lot of the time based on our analysis that it could have corrected. We expected a corrective period into mid-February, and here we are right now, and it's only been sideways. It hasn't really had any significant downside moves. The question is, are we in a renewed upside phase now, or just continuing the rotation that we had? And I'm going to show you reason to believe that there could be some further corrective periods in here as we come out into the early March time frame. So overall, we could still be in this sideways correction, or we could have renewed in the upside. We'll take a look at that as we look at the charts. We are at historical valuations, and it's being totally ignored based on the hope for the Trump economy. So 209% of GDP is where the stock market is, which is, of course, historic valuations. It can only be there because investors think that the economy going forward is going to have some massive growth by this huge amount of changes that are going on by the Trump administration. That, of course, is yet to be seen. I'm always skeptical of a market that has these kind of valuations. I've said it many times, but the market has not been willing to give any ground to the downside so far. So it can only be that they believe in what they see right now going on is going to be very, very favorable for the economy. That is yet to be seen, but the market is telling us that they believe that by the shape of things that we see here in our analysis. So still, of course, time to do some correcting in here and staying in the range, and we'll take a look at that as we look at the charts. All right, so we're going to look at the stock market analysis. We're going to look at the SPX and the MDY cycle analysis. This is, I think, the two most important to look at right now. Of course, those of you that are interested in getting the full analysis, the NASDAQ, the Russell, all of that is available. RV does that in FutureSpeak every single Wednesday. Our members get updates on that all week long. And if you become a level 3 member with the special, you'll be able to get that also. So let's take a look as we switch over now to the S&P 500. So this is our cycle analysis charts on the S&P 500. I'm showing you in here a weekly chart right there. Let me just get my pointer up here. A weekly chart right over here. We're looking at a daily chart right over there, and the next one over there is a 2-minute chart. So we're going to be able to take a look at multiple time frames in here and really extrapolate the information. Let's start on the weekly chart. So you could see in here, as I blow out this weekly chart, that there is a rhythm here in the market, and that's the cycle brackets on the bottom, which are just a guide. They're showing us this money flow patterns that are in the market. And this is a dominant cycle and a minor cycle, and that makes up a harmonic family. There are harmonics in the market, and if they were moving ideally sideways, as you see right over here in the bottom, then there'd be a peak in the middle and a decline down to that same place. But when there is an upside force, it stretches the cycles out with higher peaks and higher bottoms that you see right in here. And each of these minor cycles in here also give you information, and you can see this one had a pretty steep decline in there. That was the yen panic that we had right there, and then the market moved up again. So you could see the minor cycle formation right in here and right in here. And look at these last 1, 2, 3, 4, 5 weeks. All of them had buying coming in during the week, during the trading days, and you can see that they're all green hollow bodies, essentially the upside. The solid bodies in here are red. And those are the weeks that closed below where they began. So these last 5 weeks have all closed higher than they began, and that's why these colors are the way they are. And we are in this rising phase right over here. So the upward turn here in our reversal scout helped us understand that, and then the momentum is solidly positive right now in the S&P 500 on the weekly chart. Now consider the weekly chart kind of the intermediate holders. The monthly chart are the longer term holders, and when we do analysis of looking at weekly and daily, we're really looking at a combination of short and intermediate term holders, a number of weeks to maybe even a couple of months. So this is the weekly chart, bullish when we look at that. Now it's gotten into the extension levels right over there. This monthly extension right over there, it points to a level that just above where I thought the high for the years would be. So, of course, just because I said that back in January to our members doesn't mean it's accurate. And you can see that because of this formation, we're also projecting up in here to the next minor extension level, which is around 6290. This is around 6200. This is around 6290. It's reasonable for either of those to be where we get this continued rising phase to happen into that level. And this is the range we've been trading in all of these months, that since the election day over here in November, then we've been right over here, and you can see we're in the top of the range right over there right now. Potential breakout, and the breakout would come if we got above an important level here on the daily chart. Now I want you to see in the daily chart on the bottom is the option bias indicator. That indicator tells us the direction we want to put our option positions, because we want to make sure that, especially if you're a strategic option trader, that and you like to be short premium, that you're not short premium in the time frame that there's the highest probability of a big impulse in one direction or the other. So this tells you to skew your positions to the long side. This said skew your positions to the short side, and you can see what you would have avoided And here it says skew your positions to the long side. Each of the dips, of course, had another rally, and this low was significantly above this low right over here, and now we're in this rising phase right there. So we expected the correction to come into mid-February. We said that for weeks and weeks and weeks. We would have expected that it gets down over here near the 5,900 level, but it did not. Now I want you to notice the rhythm in here, and that is this cycle right here was 25 days. This was 21 days. This was 21 days, as you can see right there. So there is a repeating cycle pattern, and the average length, if I point to that, is 22 days, 22 bars. That's how we use this information. And you can see it's extremely valuable going back, as you had 23 days, 21, 19, 25, 21, 21 days. Principle of variance, very well followed in there, as the variance was only a couple days on either side of the average, so that's beautiful. And you can see right in here that we are now in this rising phase. That rising phase is highlighted by the slim ribbon right over here, which has stayed positive. The slim ribbon PO on the bottom, which gave you that upside resumption signal right there on that day, and it continued to move up green. So while this is green and giving you these upside signals, the market's in good shape. As you see here, when it turns red right over there, it warns you of corrective periods, and this is a fantastic indicator. Again, level 4 indicator there that you can have. The important level right over here, 21.2818, was tested today. That's the top of this cycle right over here. And were that to break out, that would take you up to these projections right over here. This was that dominant extension right there, that 2180, which is about 6180, which is about where I thought the high for the year would be. And then, of course, pointing up here into the 6200s. On these other extension levels right in there. So these are really the targets right now that we're looking at. Were it to get under 6003 that you can see right there, which is that cycle low right there, that would be a bad sign. And what it would tell you is that this corrective period in the MDY, that's the mid-cap stocks, is in effect. And I'm going to show you that on the MDY because it's really important to this analysis. Look at how well the MDY has been dictating in here the movements as you've had each of these smaller cycles in the S&P 500 following those cycles in the mid caps. So we're looking at that. I think it's very important right there, and I'm going to go to the mid cap analysis for you to see in a second. So right now, positive momentum on the daily, positive momentum on the weekly, as I just showed you, rising phase over here with all of those good patterns on the weekly, that says market up. And again, pointing to the projections as we see right up over here. Let's take a look as we move over to the 2-hour chart. Now this is fascinating because here's that MIDI, that chart right over there, that pattern in the MDY. Here is the counts on those daily cycles in the S&P 500. And you can see in here there was a very choppy corrective period where the market pulled down right in this period right here. And then this cycle right over there, again, a choppy corrective period down to that 21-day cycle and then turning up. So if I look right over here, you can see that the 2-hour, which by the way has our market condition indicator on the bottom right over here now way up here to 82, very strong, has now turned positive as you see right over there. And all of that is good, solidly positive information and gives us a sense that this upside correction has ended right over here on that 21 days, and we're renewed now on the upside to these upside projections of at least that 6180 level, which is only 65 points away here on the S&P 500. Basically, it's 1% to get up there, so it's not very much. So that's a look at the SPX, and everything we look at, solid here on the weekly, solid here on the daily, solid here on the 2-hour, all of that pointing to the upside. Again, that doesn't mean you won't get some pullbacks in here, but those, in our opinion, would not be able to get very far on the downside. If it did and got underneath that level, 6003 on the S&P 500, it would tell us that this green cycle, this corrective period, and this blue one were both in a correction into mid-March. Now let's take a look at the MDY because it's very important to this analysis. So here is your weekly MDY, and there's a corrective period going on right over here. So while the S&P 500 and the NASDAQ are up challenging these highs, the mid-caps, which really need to be leaders in this market, are not doing so. And you can see in here on the daily chart that you have some negative momentum going on. Here our option bias indicator has gone neutral right there. And the MCI on the bottom over here is in the kind of middle neutral range also. But cycle patterns are giving us some warnings. So you can see in here, this points to mid-March. So in other words, this corrective period right over here on the weekly chart says it's likely that it's going to go out into mid-March. You can see those cycle rhythms on the bottom, and likely there's a few weeks in here that there's still downside risk. Now the momentum resumed to the upside, so we're not looking for a big downside move, just some testing of these areas down over here, and then after that's over, then you would get the upturn right over there. Now, when I look here at the daily pattern is pretty weak when you look at that. You have the slim ribbon over here turning neutral. You have our reversal scout going negative right over here. And while the broad market is moving up, these mid-caps are not able to do so. You can see in here where this cycle ends exactly where I showed you on the weekly. So when I look here at the weekly chart right over here, and the daily chart right over here, they're both pointing to corrective periods out into mid-March. That is a good reason to believe there are issues for the stock market, and it won't have a big breakout yet, but the big breakout may come over here in the second half of March and into April, which would be fine on the S&P chart, and then potentially get you up to that 6180 area or so, or even a little bit higher than that. Here you can see on the 2-hour chart, it's trying to get a little upturn in here, but right now is neutral. So it's not really affecting this at all. And these downside red lines are in effect because this lateness of this cycle here, the lateness of the cycle here, and the fact that the 2-hour has not been able to turn positive yet. So that tells us that, well, you need to pay attention to the MDY, which we have here on the SPX chart. Right in here, that green line, I'm just going to blow this up for you to see again, that this is that correction out into March, and that might mean that the S&P 500 has some sideways action in here or some further corrective period in here before it begins to move up again and challenging those levels. So we're not looking for any kind of a big correction in here because this is still quite positive on the weekly chart and still pointing to the upside. So looking at all of that, the sum of the evidence right there says to me that the stock market is in very good shape. The overall upside movement is probably not going to be led by the big cap leaders that we've had before. It's probably going to be led by the mid caps, which are not in great shape right now. So to get that rotation and get it moving to the upside, we probably need to get past this March period before they can get any really strong impulses to the upside again. So right now we're in this minor rising phase on the daily chart and likely to still show some strength in the market when we look at that. I think that gives you a very, very good sense for that. Now I want to look at the MCM because I want you to see the conditions in the MCM, and really important to the analysis because we look at this on all of our analysis, and the market condition monitor is something that's included with our level 3 special. That is this application right over here, which is fantastic. So what we've done is built in all of our algorithms in here. And I'm looking at the near term right now, which is essentially only from daily chart into intraday charts. And you can see in here that it really is giving positive signals. But as we look at the IWM, which aligns very well with the mid-caps, as I just showed you, you can see it's not really able to get anything going at all. So that's really going to be important. That's going to have to turn to bullish and very bullish to get the market being able to move up again and hold it, in my opinion. I don't think that the big caps will be able to be the leaders in here. You have Meta, which has been now today having its 20th straight up day, which is one of the stocks that's still carrying the market up. And we know that's it can't go up forever, and that when it has a correction, it's going to have a significant one. So those have been one of the stocks that have held the market up in here. But I really do believe that the IWM, the MDY, they're going to have to turn more positive. I'm just going to look at the MDY right over here, and you can see that the MDY is slightly bullish to neutral. So you can type in the symbols that you're interested in there, and it will give you the sense for the condition of the market. Let's take a look at the short term. In other words, we're looking at just kind of 1 to 3 weeks out there, and you can see that again the IWM is only neutral, and the MDY. Let me just get the MDY up here for you to see. The MDY is bearish when you look at that. So it's going to be hard to continue the upside right now unless you can get the broad market helping the market move to the upside. Again, when you look at the intermediate term, this is for the longer term holders. You can see S&P 500, QQQ, very bullish. Diamonds are bullish, but the IWM is neutral. So this is all information that says to you the IWM has to improve, the MDY has to improve in order to get the market to be able to have a breakout of any significance from the range it's been trading in now at the top of the range. Let's just take a look at what the most bullish stocks are and the most negative. Here you could see in here, I'm just going to scroll down here slowly, and you'll be able to see the ones that are very bullish and then the ones that are very bearish. I'll go to also. So again, this is our built-in algorithms in there for momentum conditions. And you can see in here the ones that are great. Corn, fantastic. Look at GDXJ. That's those small miners, junior miners. They have really come on. Starbucks, very bullish. That's almost shocking with their input cost on coffee that Starbucks has been that well. Boeing doing much better, looking forward out of the hole that it's dug itself. Silver, super bullish, as you could see. SIL is the silver mining stocks, GDX. The gold mining stocks, just fantastic shape as we have been showing along with the other materials. Just a great sense for the ones that are very bullish in there. You could see T-Mobile, the European FEZ, that's the top 50 European stocks. Visa and Meta, of course, which has had this 20-day upside move in there. And now let's just take a look here as we come back up to the top right there, and we're going to look at what are the very bearish, most bearish, and you can see in here XOP, Microsoft, of course, one of the leaders in there now, being very bearish when we look at that. First, solar, of course, the support for the solar stocks that we saw from the Biden administration is not going to be there from the Trump administration. You can see Applied Materials is bearish in there at Taiwan Semiconductor. These are stocks that, have suffered, and now with the CHIPS Act being unraveled, that probably is going to hurt those also. And you can see in here, of course, the home builders with the higher interest rates and affordability very low in the home builders. You see that in DHI, that's Darden right there. And this is what the bearish stocks look like in there. Disney still bearish. And Google's got a very negative pattern. That one I think is going to see much lower prices from here. PayPal, Caterpillar, and that's it for all of the bearish stocks. So very bearish. There was only 3 of them, as you could see: XOP, Microsoft, and First Solar. Again, remember that this is the market condition monitor. This is available to level 3 and 4 members, and if you take our special, you'll be able to get this. It's a fantastic application. You compare that application along with the chart work that you do, and it really is extremely supportive. So